Hello everyone and welcome to Fluent Financial's What You Should Know for the week of March 1st. My name is Mike Lanese and I'm your portfolio manager at Fluent Financial. The major averages finished the week with sharp losses despite a Friday rebound in the big tech stocks, followed by an earlier sell-off sparked by surging yields in the U.S. Treasury market. Fears of higher rates and inflation weighed on all three major averages, with the Dow Jones dropping 1.8%, the S&P slid 2.5%, and the Nasdaq tumbled almost 5%. Bonds saw a lot of late afternoon buying on Friday, pushing the 10-year yield back down after reaching as much as 1.6% earlier in the week. This late week bond reversal did not help stocks as they still finished lower, with the trend of rising interest rates expected to continue. To put this into perspective, there's typically an inverse relationship between higher bond yields and the broader stock market. Increasing U.S. Treasury bond yields means investors can take risk off the table by selling their stocks and purchasing bonds. U.S. personal incomes soared to 10% this past week versus a prior reading of 0.6%, beating the estimate of 9.5% for the month of January. The significance here is that private consumption is an important part of the U.S. economy, so higher personal income numbers coincide with a stronger economy. Finally, durable goods orders, a key economic indicator for investors monitoring the health of economies, rose 3.4% versus an estimated 1.1%. This latest monthly reading could be signifying that a much stronger economic rebound is indicated than what previously was thought. Well, closing the month of February kind of snuck up on us with only 28 days in February this month. For the S&P, they were up 2.61%, and our stock portfolio, the V&O portfolio, was up 4.23%. For the week ahead, Johnson & Johnson received emergency vaccine approval over the weekend for their COVID-19 vaccine and is expected to have that vaccine begin distribution within the first 48 hours of this week. The oil market could be a little bit jumpy as OPEC meets on Thursday, and they will be discussing production limits and possible cuts and quotas that will take effect in April. Bond traders will continue to keep an eye on the U.S. Treasury rates to see what those are going to be doing and how that will affect the overall stock market. In earnings news, we have retailers dominating earnings this week with both Target and Costco reporting, and AMD hopes to create a stir with its new chip unveiling. Finally, the U.S. jobs report comes out this Thursday with an estimate of 760,000 jobs lost. This report is an indicator used to assess the state of the U.S. labor market and general health of the economy. For an options update, we are 1 week through a 4-week option expiration cycle. Our stock income portfolio has generated 0.8% from the sale of 40% of our possible calls, and everything is currently out of the money, which is to be expected with the late week market sell-off last week. The Advantage portfolio has sold 39% of its possible calls and generated 0.67% in call income. As always, thank you for tuning in to What You Should Know. Have a great week.